Today on Open Exam Prep, we're going to break down a critical topic for the Securities Industry Essentials exam, also known as the SIE exam. We will be covering market manipulation, specifically focusing on illegal activities like pump and dump schemes, front-running, and painting the tape. Market manipulation refers to any intentional conduct designed to deceive or defraud investors by controlling or artificially affecting the price of securities. The SIE exam will expect you to identify these prohibited practices from a given scenario. Let's start with a classic example, the pump and dump. This is where fraudsters try to boost the price of a stock through false, misleading, or greatly exaggerated statements. They buy a stock, typically a low-priced microcap or penny stock, then pump it up by spreading false positive news through social media, email spam, or online forums. As unsuspecting investors buy the stock based on this hype, the price soars. The manipulators then dump their shares at the inflated price, making a significant profit. Once they stop hyping and start selling, the stock price plummets, leaving the new investors with major losses. On the exam, a question might describe a scenario where a registered representative buys a thinly traded stock and then heavily promotes it on a blog, causing the price to rise before they sell their position. This is a clear-cut pump and dump. Next up is front-running, which is a prohibited practice that directly involves non-public information about an impending trade. Imagine a broker receives a massive buy order for a particular stock from an institutional client, like a mutual fund. The broker knows that such a large order will almost certainly drive the stock's price higher once it's executed. Before placing the client's order, the broker quickly buys some shares of that same stock for their own personal account. After their personal trade is complete, they execute the client's large order. The price jumps as predicted, and the broker then sells their own shares for a quick, risk-free profit. This is illegal because the broker is using advanced knowledge of their client's order to their own advantage, which is a breach of their fiduciary duty. A common trap on the exam is confusing this with insider trading. Remember, front-running is about knowledge of a pending order, not confidential corporate information like a pending merger. Now let's discuss painting the tape. This term refers to creating a false or misleading appearance of active trading in a security. The goal is to lure other investors into the market by making a stock look more interesting and liquid than it actually is. One way to do this is through matched orders. This involves two or more parties colluding to buy and sell a security among themselves. They place buy and sell orders at roughly the same time, for the same quantity, and at the same price. While it looks like a lot of trading is happening, there's no real change in beneficial ownership. It's just a charade to inflate the trading volume reported on the consolidated tape. A specific form of this manipulation is called marking the close. This is the act of placing buy or sell orders at or near the close of the trading day to influence the stock's closing price. Why would someone do this? A portfolio manager might want to inflate the value of a security to improve their fund's reported performance. Or an investor might do it to avoid a margin call by ensuring a stock closes above a certain price. An exam question might describe a trader executing a series of buy orders in the last 5 minutes of trading to push a stock's price up by a few cents. This is marking the close. To help you remember these key concepts, use this simple phrase: people freak out over prices. The P in people stands for pump and dump, pumping up the price with hype. The F in freak stands for front-running, running in front of a big client order. And the final P in prices stands for painting the tape, painting a false picture of trading activity and price. By understanding the motivation behind these actions to illegally profit by distorting the market, you can easily identify them in any exam scenario.